I just wanted to say hello and welcome to tonight's event on managing your finances as a freelance journalist. I'm Leanne Dimiturco. I'm the head of communications and events at the Rory Peck Trust. And I just wanted to say thank you all for joining us this evening. I think it'll be a really informative session, and we're lucky to have a very good trainer with us tonight as well. As you might already know, the Rory Peck Trust's main mission is to provide practical and financial support to freelance journalists, as well as their families worldwide. Part of this is trying to help you work more safely and professionally. So the main ways we do this so far are through our assistance grants, our training fund, and we also have free online resources for freelancers. And finally, our annual awards, which actually open for entries this month. So do take a look at our website if you have some content you want to enter. This is the third in our new Business of Freelancing series. And the series focuses basically on the practical aspects of freelancing, such as how to get commissions, negotiating contracts, and this event, of course, the financial side of things. We'll be sending a survey after the event today, so please do fill it out. Let us know if there are any other topics you'd like to see covered in future webinars, as we're totally open and we're here for you guys. We know that the pandemic has had a devastating impact on journalists' livelihoods, and we've heard from so many freelancers that they need both that practical support as well as financial support right now. So we launched this event series to help in a more practical way. But just to let you all know, we do also have available right now an assistance fund for those experiencing financial hardship. So you can also check our website for the details if needed. So just to give you a quick rundown of how the session will operate today. So David Thomas is here with us tonight to lead the event, and it will be followed by a Q&A session. So if you do have any questions, please feel free to type them into the chat at any time, and David will pick up on them either then or at the end, whatever seems the most suitable. So just a brief introduction of David. We're really pleased he's able to join us tonight. David is a former BBC journalist who has been running his own training business for the past 15 years, helping freelancers to be more organized and businesslike. David worked at the BBC for 22 years, helping set up 2 local radio stations, producing current affairs output at the World Service, and running the production department looking after English language teaching for the world. So thanks again, everyone, for joining us, and I'll hand over to David now.
Thank you very much, Leanne. I'm so delighted to be here. I've known about the Rory Peck Trust for so many years, and it's just an honor to be with you. Also, I can see some familiar names in front of me, which is great. So if you know me, hi, it's nice to see you again. I, as Leanne has mentioned, have a background in broadcasting. We're going to talk about finance today. And some people always think I must be an accountant or something. I have nothing against accountants, don't get me wrong, but I'm not one of those, and I'm not a tax advisor or anything like that. So what I am is somebody who hates wasting time on paperwork. And so what I'm going to do is go through some of the things to think about, given that we all really hate wasting time on paperwork, and we all want to get on with our fun job. There are certain different ways of thinking about finance, which I've discovered are completely new to many people, and I'm going to try and drop some ideas into your head. I'm certainly not suggesting that all of you are disorganized around money, although I do work purely with creative people, and I suspect the majority of people I work with would describe themselves as highly disorganized when it comes to money. So we'll see how it goes. I'm not going to just talk at you for an hour or so. There's going to be a lot of things I'm going to show you. We're recording this, so that's one thing I should say, but also there are resources which you can download. So everything I show you tonight is going to be available for you on my website afterwards. So I'm going to just go through that and show you that in a minute. I'm very, very happy for you to put questions as we go along in the chat box. There's actually a kind of natural place in about 20 minutes where I can reach for a glass of water. And may be able to address some of your questions up to that point. Perhaps hold off asking too many questions just at the moment, because I might answer them in the next 10 minutes. But I will certainly make sure we've got time towards the end where you can ask anything you like of me. So first thing I'm going to do is share my screen. And as I say, everything I share with you, you can get afterwards. So let me show you where you can get things. So, by the way, I love the title which Leanne suggested for this. I'm thinking of using "Show Me the Money" for all my courses. I think it's brilliant. But I do a lot of courses for freelancers on managing finances as well as networking skills. Those are the 2 things that I train most in, because everybody needs to be able to deal with those things, to be businesslike. So where can you get the resources? Because obviously it's not just a question of me talking for an hour and then you forgetting everything. You need to be able to get things afterwards. Well, this is my website, which I've been running for 15 years, and it's got a whole load of stuff on it, which may be useful to you as a freelancer. And I have stuff on the blog. I have some free stuff, which is about the pandemic and support or no support for freelancers through the pandemic, but also course materials. If you click on the course materials link, you will actually find that there's a Rory Peck bit. And if you click on Rory Peck Trust, it will give you this course name, and click through from that and you get everything that I'm showing you. I will remind you of where that is later on. I am going to put into the chat box the password for you though, because that is something you'll be prompted to put in. So what you're going to do is look at course materials and then scroll down to the Rory Peck Trust section. Don't do it now because we've got a lot to talk about. I'm going to cover these areas, which I think will cover quite a lot of ground for people. We're going to look at thinking about your current situation. So what can you learn about yourself? We're also going to talk about what kind of a freelancer you are and how that works with tax. We're then going to talk about how you can estimate things for the next 12 months, something which many freelancers are very bad at doing. But I'm going to give you a tool which will help you to be able to predict what might happen over the next year, which may come as a surprise to you, given that we don't really know what's going to happen over the next 12 minutes at the moment, do we? We need to talk about savings, which is a little bit dull, but I've got some quick and easy ways of thinking about that. And then organizing record keeping so that you don't spend much time on it. I've got some tools to give you, but also some ideas, which hopefully will help you with any record keeping that you need to do. And I will go through those towards the end of the session. So that will really cover quite a lot of ground, which is why I've got all the resources on my website. So you don't have to remember it all as you go along. I think the first question I often get asked is, how can I earn more money? But this is a much more important question. A question about money, which starts with where is your money going, not where is it coming from? I think every freelancer needs to realize that there are two financial systems going on in their life. And I've represented those on the screen over two different circles. So we got on the left-hand side, we've got a bit of your life, which is where you're earning money. So this is what I call the business end of your life. So this is all the money flowing in. And then over on the right-hand side, we have you spending money. And I mean spending here in your personal life, not spending money in the business side. That obviously is something that some of you might do, but I really want to help you to kind of think of your life as being in two separate parts, even though there's one of you. Clearly, there's only one of you because you're freelance and you're in the middle of all of this. So there's an overlap between these two things, but they operate differently. And it's a really good idea to organize them differently. Now, I mentioned a moment ago that people often ask, well, how can I earn more money? But the reason I think that that's not the good place to start when we're talking about freelance finances is that there's an unpredictable nature to the earnings side. It's actually quite difficult to pin down. If you think about it, people in long-term jobs, sort of job I used to have at the BBC, where you had a monthly salary, what people do is they think, well, I know what I'm getting every month, so I'll try to live within it. And this is what people in full-time jobs tend to do. They try to live within their salary. But with freelancing, you can't really do that because you're moving around so much and doing little bits of work here and there. And there'll be some parts of the year as well where you get less money than others. So the earning side is rather unpredictable. And some freelancers would even say it's unpredictable because even when they're earning money, they don't know when the money will arrive because they might invoice for the work they do and then wait to be paid. So there's unpredictability and a lack of control, which is built into the earnings side for any freelancers. So the best place to start is not the income, it's the spending, because that's your fixed point. And this brings you predictability. Now, I've got some suggestions around this, and I'm going to give you a tool which can help to try and pin down how hard to work. Okay, so you don't want to work too hard, but the starting point is thinking about what is the survival figure, what is the minimum you would need to earn. Many people are vaguely aware of this, and this is enough to give you a bit of pizza on the table and a small place to live. That's what those two symbols are supposed to represent. Much more importantly is the thriving figure. So we don't just want to survive. What we want is to be happy. And we want to thrive as a freelancer. So that will include hobbies. I've just put a symbol of some sport, maybe someone cycling or music, all sorts of hobbies you might have in your life, things that keep you buoyant, things that keep you optimistic. And it's really important to focus on those, because when you're busy as a freelancer, you need to keep the focus on the things which will reduce your stress, keep you happy and optimistic. And the thriving figure should include those sorts of parts of your life. It's not just about surviving. What this enables you to do is to set a monthly budget for each part of your life. So that what effectively you're doing is you're sort of pricing your personal life, which is a bit, sounds a bit harsh to do it, but I'm going to show you something which some of you might find quite useful. It's a spreadsheet, but I've kind of painted it up a little bit so it doesn't look too spreadsheety, because people hate spreadsheets, don't they? So this is called a monthly spending budget, and it's a tool which I always give to freelancers as a way of trying to work out how much their life is costing them on a monthly basis. Now, I'm going to just cover off one bit, which is about work. We're going to come to that in a minute, but just focus on this bit, which is about personal life. And down here, you can see I've put lots of different suggested kind of categories of things you might spend money on in a month. And per calendar month, which is what PCM stands for, you could actually put in what your life is costing you. So if you normally spend £500 on rent, stick that in as 500. I'm making up some figures here, okay? So I'm just randomly typing figures in so that you can see how it works. Broadband, 25 a month, Netflix and Spotify and Disney Plus and all those. We better put some for food. Anybody got any hobbies that they want to put in as well? Anybody got a hobby that they spend? Put it in the chat box if you have a hobby that you spend a little bit of money on every month. I'd be really interested to know what kind of thing you have that you would put some money in, that you would consider to be part of your life that you would like to budget for. I'll just put 50 quid. Morris dancing, there you go. I used to be a Morris dancer. That was a very long time ago. Let's put it in here. Morris dancing, there we go. That means you got no, you haven't got any money left for clothes. So we'll put 0 for that. And so on and so on and so on. Now, I've also put 3 sections for savings, which I'm going to come on to later. You could put a monthly amount, like 20 quid a month for short term, medium term and long term, or 5 quid, or, you know, it doesn't matter what it is, but get into the habit of saving long term if you've not done it yet. And so on and so on. Now, this sheet has already added all that up. So we have £1,403, and that's the cost of this person's life. So this is kind of what they would need to spend every month to cover off the kinds of things that they do with their life. Now, some people also have costs which they don't consider personal life. They consider them more to do with work. But if they're a recurring work cost, like a subscription to something, then you can stick it up in this bit up here, and it just puts it for every month, maybe 20 quid for something. If you once a year bought equipment of some sort, I've no idea whether you would, but let's imagine you spent 500 quid on some special kit once a year. That's a one-off. So this is the one-off section here. And what that does, then it gets divided by 12 and spread across all 12 months. And it tots that up along with the personal spending. So we now have the spending per month being £1,464. Now, the final thing that this sheet allows you to do is it allows you to work out how hard you would need to work to cover those costs. So it's really coming at it completely the opposite way around from what most people do, where they look at what they earn and then try to live within it. Now, the way I've set it up is to have as a daily rate, if you know what your daily rate would be for an amount of work you did. Now, some of you may not be paid on a daily rate basis, and I do understand that. But if you're not, just work out how long it takes you to do certain project work, and then look at the number of days, look at the amount you would earn in those days, and then divide it by the number of days. That can work pretty well. But I'm just going to make up a figure of £150 a day. So let's imagine someone was going to be paid 150 quid for doing a day's work. We're going to take some off immediately for tax. So you're going to negotiate 150, but some of that money is going to go to the tax office. So let's just take 20% off. You're left with £120 spending money. So the sheet knows that in a day's work, you will get £120 spending money. It knows that in a month, you've got to find £1,464. So what it finally does is it tells you how many days you would need to earn in a month. And the answer is 12. And in this example, 12 earning days in a month across the year would cover your costs. Now, I think anything under 15 is pretty healthy if you do this calculation. You may say, well, hang on a minute, there are 30 days in the month, so why are you talking about 15? Well, you're going to want the weekends. And also, being freelance, you're going to have to dedicate some working time to looking for work, possibly doing other research on a training course. So that means you can't earn on every working day. So by saying we're talking about 12 earning days, we're actually giving a bit of leeway there. I have to say, when I do this in my training courses face-to-face, we do this with a calculator each and a bit of paper and a pencil. Some people are really, really pleased that they don't have to work as hard as they thought. They thought that they would have to work all hours. So it can be quite a relief. But what we're doing with a sheet like that is we're trying to make sure that you quantify the financial issues in your life. I think generally we're very bad at this, just generally speaking. People are bad at quantifying anything. They say, oh, I've got no money. But actually, it's how much don't you have is the important question. Or they say, oh, I'm earning loads next year. Yeah, but how much are you spending as well? You know, so it's finding tools that can quantify this stuff. Now, that particular spreadsheet is one of the templates, which I'll show you later. It's on my website, and I'll make sure you get the details of where to find that afterwards. It's in the course materials section for the Rory Peck Trust. Now, of course, the other thing is that what I just gave you was a sheet which gives you an average, 12 days average every month across a year. But you know, if you're experienced, that sometimes during the year you don't earn as much. So in fact, let me know in the chat box, which parts of the year do you tend not to get so much money in? If you're freelancing, you will know it tends to go up and it goes down depending on the seasons. It'll depend what you do, depends what sort of freelancer you are. But I'd be really interested to know which parts of the year do you tend not to earn as much. So Rick, thanks. Rick said that summer is slow. So that's exactly the same as me, Rick. My training business gets no work in August. Nobody wants training in August. The sun's shining, everybody's out sunbathing. Fortunately, so am I. So it's a win-win. But of course, it's not because I'm a rubbish trainer. I might be, but that's not why I don't get work in August. Nobody gets work in August in this line of business. And as we've got Shristi and Sarah have mentioned that the winter is difficult. And this is quite typical in production in TV and film, I know. I meet a lot of freelancers who find those months around the winter time quite difficult. So what that means is that you can use a tool to work out the average. What you can then do is you can work out how you need to up the earning power in some months, but you can quantify that in ways which I'm going to show you a little bit later as well. So I've got another tool which can help you forecast using the knowledge you've got about yourself. So yeah, and Katerina, I can see, you know, you've got different parts of the year where you did different activities because it fits better with the earning power. So you're starting to make it a little bit of a sort of strategic planning thing, that you're saying there are sometimes you can earn, so you've got to earn more, sometimes you don't, but then you put figures on it and it starts to make it a much less scary proposition. So I'm going to move us on and talk about the way people get paid, so we can talk a little bit about tax. I promised we'd talk about tax today because there's a lot of mystery around how tax would work for freelancers, but I want to just make sure that we define what we're talking about. So the second section today is to look at how people get paid in the UK. Okay, now it will vary a little bit around the world, of course, as to how people are defined. But if we look at the UK, there are two words which are used by the tax office if you work for somebody else, if you're paid by somebody else. You can either be employed, according to the tax office, or you can be self-employed. And that's it. There aren't any other words to describe the way the money gets into your pocket. And the first thing you notice is that the word freelance doesn't appear on the screen. The tax office doesn't use the word freelance. If you ring up the tax office to talk about freelancing, they really won't understand what you mean. They'll probably assume some things which may not even be true. So the word freelance actually is referring potentially to both of these ways of being paid. So let's have a look at how that can be. The word freelance doesn't really have a technical meaning. All it really means is someone who's working temporarily and moving around, getting their income from different sources, but it doesn't say any more than that. And that I like to think that there being three different types of freelancer. The first type, number one here on the left, that's the type of freelancer who would be paid as if they're employed. So this might be people in relatively junior roles, because very often they are paid that way. And in production work, sometimes they're paid that way if you're an assistant, and even if you're doing a day's work. So it's not about the length of time, it's about the nature of the job. So some people will be paid PAYE, but because they are moving around from job to job to job, they call themselves freelance. I call those sorts of people PAYE freelancers. The second type are what I call sole trader freelancers, and they are people who the tax office would call self-employed. So when the tax office says self-employed, it specifically is referring to people who are registered as a sole trader. And that is also a very common way of working. Now, between those two, normally we cover off quite a lot of people on my courses, but sometimes we have people who are registered as their own limited company. So they set up their own limited company and they call themselves freelance because they're moving around from job to job to job, but they're doing it in a different way. They're doing it not as a sole trader, they're doing it because they've set up a limited company. And that's the third type of freelancer. All three of these types of freelancer are taxed in very different ways. So it's really important to know what we're talking about. So whenever we talk about freelancing, I will tend to qualify the word, because when we talk about finance, we need to know which type we're talking about. And to that end, you'll notice that these three types of icon that are on the screen will appear on my slides at various points. And the reason they appear is to try and really clarify which type I'm referring to, because it can get confusing really quickly. Also, you'll find these icons on my website. They're all over the website because some of my web pages will refer to advice for specifically PAYE freelancing or specifically sole traders, etc. So let's just have a quick look at the difference between someone who earns as PAYE as a freelancer. So they're paid as if they are employed. So for tax purposes, the employer does a lot of the heavy lifting. They do the tax stuff, for example. And many people will be earning this way. Sometimes people are earning this way in a job on the side. Meanwhile, they might be operating in a different way as a freelancer. And I call them PAYE freelancers, these employed people, because the PAYE system is the one that is used to take the tax off them. So the employer uses a payroll system, pay as you earn, and takes off a number of things, tax and national insurance being two of them, and there are a couple of others which I'll mention later. Now, what about self-employed people? So this is what we call sole trader freelancers. Sole trader freelancers are treated by the tax office as if they are literally a business. So the tax office says, if you are a sole trader, you are taxed as a business. And because you're a business, we have a different word for the income. If you invoice somebody as a sole trader, the word we use for the money you get when you're paid is called turnover. And nothing's been taken off that. Normally, the person paying you just pays you what you've invoiced, and you do your own reporting to the tax office. I'm not going to use much jargon today, by the way, but turnover is a really useful term. It just means what you're given by your clients. So what you do then is you fill in a tax return and you report your turnover and you report your business costs. So this will be expenses or costs to be a business. Because a sole trader is a type of business in the UK, then it is not taxed on turnover. Every business in the UK is not taxed on turnover, but is taxed on profit. And profit is turnover minus business costs. So sole traders always keep a record of both of those things. And a little bit later, I'm going to show you ways of doing that, which will hopefully make it more efficient and not help you lose your sanity, because we don't want to do that. If you're employed, by the way, or paid as if you're employed, PAYE, even as a freelancer, the employer will report all the bits about your finance to the tax office themselves. They use something called real-time information, which means that when you receive any money through PAYE, the tax office already knows about it, which is a bit spooky. So the employer has to, by law, report what they paid you and the tax that's already been taken off to the tax office using RTI, and they do that on the day or before the day you're paid. Most employees are totally unaware of that happening. It's happening in the background. Now, Ruth has asked a very perceptive question. Hello, Ruth. And that is, well, hang on a minute. What about both? Could you be employed and self-employed? Well, the answer is, yes, you can, but not from the same job. So I'll show you that in a minute. You're taxed on income if you're employed, and that has usually already been taxed when you receive the money. But with a sole trader, you're doing all the paperwork, but they're not mutually exclusive. You can be employed for some work and self-employed, and that can happen at the same time, but obviously for different jobs. Okay, it's not for the same job. That would be ridiculous. But your employed income would be PAYE, and there is, in fact, a separate section on a tax return for that, which is separated out from the other stuff, which is you being a sole trader. Because being a sole trader, you're actually running a one-person business. That's how the tax office thinks of you. So you wouldn't want to mix those things up. They're taxed differently, and the employment stuff has been taxed already, and the self-employed stuff has not. But it's perfectly okay to be both. I meet loads of people all the time who are both employed for some jobs and self-employed, sort of like running a one-person business, doing other stuff. It's perfectly okay to be both. There's plenty of countries in the world where it's not okay to be both, but the UK is a very flexible place to earn money. Basically, they want you to earn as much as you can in any way you can, as long as you pay your taxes, I guess. Now, let's just do one other thing, and let's just put a sole trader up on the screen by itself. So we have the word turnover for the sole trader stuff. That sole trader could possibly be also employed. So that could be the other income, which is there. Or maybe they rent out a room in their house, and that's different income as well. So, you know, it's a person who's being a business. And they're taxed on the profit, which is turnover minus business expenses. This is a type of business, but there's another type of business, and I regularly meet people who are other types of business as well. And the main one that I'd like to talk about is going to be the limited company freelancer. So I'm going to put it on the screen so that we can compare and contrast. The first thing to say about a limited company freelancer is that the business is not the person. Now, this is very different from being a sole trader. In a limited company structure, the business is the company, and the company is legally separate from the human being or human beings, because it could be that more than one person runs the company. Now, I've had experience of both of these. I actually started my training business as a sole trader for 5 years and then moved it across and set it up as a limited company training business about 10 years ago. And the one thing that I noticed when I did that was the first thing is that the money doesn't come in to me anymore, because there's a legal separation between the business and me, David Thomas. So the turnover now goes into the company, which causes a problem for me, because I've got to go down Sainsbury's and things like that, haven't I? So how do I get the money out becomes the issue. Well, because that limited company is a legal entity of its own, you can put money in and take money out, but it has to be tracked very, very precisely. There are quite stringent laws around this. You can't just take the money out of the company. That would be stealing from another legal entity. So you're not allowed to do that. So running a limited company, for example, you set up a salary scheme, pay yourself a salary every month. And that is a salary the same as any other salary. It's a PAYE system. You're employed by your own company. So that's one way of getting money out of your own company. Now, that's very different from being a sole trader. I might be the only person running my company, but that does not make me a sole trader. A sole trader is something technical. It means something very specific. And the reason it's called sole is because this person who is the sole trader is also legally the business. There is no legal separation. It means, technically speaking, if the business goes bankrupt, then you, the sole trader, are personally bankrupt as well. And that's one of the reasons why limited company structures are used. It's a way of managing risk. The reason I moved into a limited company structure was I was starting to work with people overseas. I was buying in some people to work with me on much, much bigger projects. And I thought, you know what, I don't want to carry that risk of something possibly going wrong as a sole trader. I'd like to separate my business out from my own personal finances and half a mortgage and all the other things I own. So that's the reason I did it. Now, I have a number of help sheets which are on different topics on my website. And help sheet number 2 is about types of business. And on there, I've got a little bit more of the pros and cons of operating in these different ways. So sole trader versus limited company and things like that. And also these diagrams there too. So if you want to look into this sort of thing more, then have a look at help sheet number 2. There's more complication, though, on the limited company side, because it's not just a salary that is a way of taking money out of a company and into your pocket if you run that company. The other way, and I can hear people shouting at the screen saying dividends. That's the other way of doing it. So dividends. Dividend is basically a word for profit, which is in a company after the company has been accounting for all its salaries, expenses, taxes, anything that is something that the company has to cover. If there's still profit left in the company bank account, then that can be taken out any time that the people running the company want to, and that is taken out as what is called a dividend. And it's divided up, hence the word dividend, between the people who own the company. And if only one person owns the company, it's divided 100% into your pocket. Now, you might think, oh, well, that sounds all very nice, but it does make things a little bit more complicated. For example, we have a tax return for the company to do because the company has to do its own taxes. That way, it knows how much tax to pay in corporation tax, because the company doesn't pay income tax on its profits. It pays corporation tax on its profits because it's a company, not a person. And then over here, we have the person, the individual, also doing a tax return. So you can see, just look at the screen, there's a huge amount more bureaucracy there on the right-hand side. And actually, what normally happens is people will have an accountant helping them if they're running as a limited company. I've got a help sheet on accountants as well, by the way. If you're a sole trader or a limited company, then take a look at help sheet 8 if you haven't already got an accountant. They're not compulsory, by the way. You don't have to have one. But for a sole trader, they can be very useful as well, and cheaper than for a limited company because there's a lot less to do. But help sheet 8 is what to ask an accountant if you're thinking of getting one. And I often get asked that question. So there's quite a lot of resources there. Now, I'd be really interested to know whether we have a kind of balance of sole traders, limited companies and things. Do you want to just put in the chat box, if you want to, whether you're a limited company or a sole trader, or indeed a PAYE freelancer, or even a mixture? Now we got somebody who's sole trader about to go into limited. There we go. So we've got a lot of sole traders here. Katharina, I'm German. It doesn't apply. Thank you, Katharina. That's great. Yeah, I did say it does vary around the world. Incidentally, Haley, you've said LLC. LLC is an American term. We don't use it in the UK. And a limited liability company in the United States is different from a limited company in the UK. So I'm just going to flag that up. Just check you know what you mean. Yeah, and we got Ruth asked about, can you be a mixture? And she's delighted to learn that you can, because she is. We got Julie as well. So that's great. Thanks, Haley. LLC, American. That I nailed it there. Yeah, Australian. I don't know about Australia, Shaya. Of course, it'll be where you're resident, not what passport you carry. If you're resident in the UK, it doesn't matter where you come from, you're going to be fitting into this system. So obviously, I'm going to talk a little bit now about British tax, just so that we understand how it works, because the majority of you probably going to be affected by that. Those of you who are living in other countries, thanks for being with us. I promise we're going to look at other stuff, which is going to be generally applicable to you very, very shortly as well. Do check you're not being taxed twice if you're resident in the UK, but being taxed locally as well because of the nature of the way things work there. On gov.uk, there's all sorts of stuff about avoiding double taxation and things. And I have a few links on my website if that's going to be helpful to you as well. So let's just talk about income tax. Income tax is a really important tax to understand if you're resident in the UK. And the reason it's so important is not just because you get to pay it when you're PAYE, but it's also important because you will find that it's your profit as a sole trader that is plugged into the income tax system. So this means that the PAYE freelancers, they're going to have to pay income tax and the employer sorts it out for them. But the sole traders, they pay income tax on their profits. So income tax, once you've looked at that, you've nailed most of the taxes you need to know about. I'm going to leave those of you who are going to become limited companies to look into dividend taxes, which are way too complicated for me to go into today, but dividends are taxed. That's the only thing I need to flag up for those of you who are going to be limited companies. Arpan, give my love to Jakarta. Nice to see we've got people all over the place here in the nicest possible way. So let's have a look at the income tax year. In the UK, our tax years are really weird. We have a weird date for the start and end of the tax year. So I'm not going to ask you to put this in the chat box, but anybody know the start and end dates of the tax year? Yes, of course you do. It's the 5th. Yeah, April, Lorraine. So the 5th of April is the end of a tax year. We've just gone through that. And the 6th of April is the start of the new tax year. Please don't ask why we have such stupid dates. We'll be here all night. Now, the thing about the tax year, we talk about the tax year, we often do mean the income tax year when we say that. And certainly for sole traders, this is the really important set of dates. So this is the tax year. Each tax year is looked at differently, or separately rather, separately from every other. We don't mix up tax years. We just look between those dates and ask ourselves, well, what's happened between those dates? And then we can work out what tax should be paid or should have been paid. The rules change slightly each year. In fact, if you have a change of government, the rules can change quite radically. They haven't changed a huge amount in recent years because we've had a Conservative government for the last X years. But I'm going to run through how tax works at the moment so that you can work out perhaps a little bit more about how the income tax system operates in the UK. Some of you who might be listening from overseas might be saying, oh, well, that's vaguely interesting. I'm sure everybody in the UK already knows that. And those of you in the UK are going, I'm glad he's going through this because I haven't got a clue about any of this. So let's have a look at the tax year we're in now. And I'm going to do it using a metaphor. In this metaphor for income tax, you are the bathtub. All right. So I want you to imagine that you, the freelancer, are the bathtub. And into the bathtub, we're going to put some money. So this could be earnings PAYE. It could also be profits as a sole trader. So both of those go into the bath. We're going to take some out for tax, and we're going to take some out for national insurance, which is like a tax. And then what you're left with in the bath, that is what you wallow in. So there we go. There's a measuring stick going down the side of the bath there. Now, the first thing I'm going to do is put some money in the bath, but that first bit of money is not actually taxed. The first amount of money you earn in the UK is called your personal allowance. And that's been going up and up and up over recent years. Most people are aware that it used to be about 10,000 a few years ago, but it's gone up quite a bit. It's been a policy under a number of different chancellors of the Exchequer recently. The current personal allowance, therefore tax-free, is £12,570. So if you were to earn £12,570 either in profit as a sole trader or as PAYE income, you would not be paying any tax. And if you'd already paid some tax, they'll give it you back because that personal allowance is tax-free. The next pound that you earn, though, will be taxed, and the standard rate is 20%. Now, I don't know if anybody here is resident in Scotland. If you're resident in Scotland, let me know in the chat box because I have a bath specially for you. But the rest of the UK, this is how it works. So we have 20% tax for the next 37,700. After that, if you add those two together, you get to 50,270. Anything over that gets taxed at 40%. Doesn't affect a huge number of people. It's only 15% of earners in the UK. And then there is a top rate of tax, which hardly affects anybody at all, 45% for anything you earn over 150,000. And just to make it really, really clear, anything above this threshold here, these thresholds, is taxed at that higher rate, but anything below it is always taxed at the lower rate, just to make it clear. So you can be in the 40% tax bracket, but it's only the bit above 50,270 that gets taxed at 40%. So it's always better to earn more money. Some people say, well, I mustn't earn more. I might go into the 40% tax bracket. Yeah, but you will be better off. You know, you might have more tax on that little bit extra, but you will always be better off. Incidentally, I know you're all journalists. You may be fascinated to know that the 1% of earners brings in nearly 30% of income tax to the exchequer because they earn such a large amount of money. So I thought you might be interested in that. So that was tax. Let's look at national insurance, which we're then going to add to the bathtub. National insurance is a bit like a tax. And there are two ways of paying it. I mean, if you're employed, the employer pays it for you, and it's called class 1, and it's a percentage of your salary. You notice there's a threshold thing going on here as well, but all the details of that would be in your payslip. Those of you who are a sole trader, you will find it on your tax return. Sole traders, which is the other way you're allowed to earn money, remember, sole traders pay two types of national insurance. One of them is really important, and the other one is really annoying. Class 2 is the important one. It's only £3.05 a week at the moment. And at the end of each tax year, you look back over the previous year that's just finished. When you're doing your tax return, it says, how many weeks were you registered as a sole trader? If it was for the whole year, it's going to be 52 weeks times £3.05. So just over 150 quid. That will be your national insurance class 2 bill. And that gives you your national insurance record. So it means you get full, you get state pension, basic state pension when you get to the right age, or maternity allowance if you're a woman going to have a child. Class 2 national insurance, if people are just earning as a sole trader, it's actually quite important for some people. So you won't forget to do it. It'll be in the tax return, but don't balk at paying it. It's quite a bargain. Unfortunately, they also, therefore, because it's a bargain, they make you pay more. So class 4 national insurance is 9% of your profits over that threshold. So this behaves like an extra income tax for sole traders, which is a bit annoying, really. I mean, hey, someone's got to pay for the schools and the police and the hospitals, so I guess we should be paying for this stuff. But the point is, it's an extra type of income tax for sole traders. They call it class 4 national insurance, but it doesn't give you a national insurance record. So that's your two classes of national insurance for sole traders. Both of those are in the tax return, so you won't forget to do them. And just to highlight, we're talking here about profits again, not turnover. That's the thing which is getting plugged into the calculation. So let's just add national insurance to the tax bathtub. So the national insurance, if you're a sole trader, let's stick £3.05 into the bucket. You don't even have to earn to be paying that if you don't want to. I mean, you could have no earnings and still pay class 2, and that gives you a national insurance record. And then if you're a class 1, that means you're an employee. And if you're a class 4, that means you'll be a sole trader earning more than about 9,500. So there we go. So class 4 is just a way of getting more money off us. Big discussions in government about how they might take even more money off sole traders. I don't know how that's going to go down, but keep an eye on this at the next budget later in the year. I blog about all this stuff because I'm a bit sad. But if you want to keep in touch, I do highlight things that might be changes around all of this. Now, Scotland has a different bath. I'm not going to run through that with you because I don't think anybody said they were in Scotland. But if you become resident in Scotland, you have an S in front of your tax code. But apart from that, their bathtub is more complicated and prettier, actually. But you can see the bathtub on my website if you ever move to Scotland. So we rattled through quite a lot of stuff there. And I want to make sure that we also touch on just the timelines about when tax gets paid and how. So I'm just going to put back up on the screen the income tax year. There we go. And I'm going to put a second year just underneath it. There you go. So we got 2 tax years now, the purple one at the top and now the green one at the bottom. Anybody know the deadline for doing your tax return for the purple year? So if you've earned money and you have to do a tax return, when is the deadline for doing that, I wonder? Rick, thank you. Yeah. Yeah. Okay, Ruth, I go for that. You're being very vague, Rick and Ruth. You're actually just saying January, but it's. I think you know this. Probably it's the 31st of January. Now I'm going to talk about a little bit later. I'm going to talk about record keeping. Okay, so we're going to talk about how to do records. I just wanted to highlight for you that that is a deadline, not a target. Okay, so don't leave it to January. You can do it earlier than that. You can do it way over here, and I'll talk to you why that's important a little bit later. It's also a deadline for paying any tax that you might owe, and sole traders actually are often asked then to pay for half of the year they're already in as well. So you get a tax bill just before Christmas, and it will have last year's tax if you're owing any, but also it'll say, well, we're going to assume that you earn the same this year, so could you pay half of that now, please? That is a kind of a forecast, and if you think that there's a very good reason why that forecast is wrong, you can actually get in touch with them and say, no, I'm not going to earn that much this year. I'd like to pay less on account. This term payment on account, it sometimes catches people out, the thought that they might have to pay tax kind of in the year you're already in. But as long as you've kept 20% aside of any untaxed income, you'll always have enough to cover a tax bill. So just get used to the idea of putting 20 to 25% aside. If you're a normal basic rate taxpayer, that should be way enough to cover all your bills if you get any. Once you're up and running as a sole trader, as some of you know, you also end up paying a bit of tax in July. And although some people say, well, do you really have to pay tax twice? Well, yes, but that's quite a good thing because you won't forget. And it doesn't mean to say you pay twice as much tax. It just means you're paying sort of spread out across the year. So always just put 20 to 25% aside. You will have enough for a tax bill. Now, if you want to learn more, did you know the tax office has a YouTube channel? I mean, honestly, it's been worth coming on this session just for that bit of information, hasn't it? The YouTube channel of the tax office, you're all going to go and subscribe immediately, I'm sure. It has all sorts of useful little videos. And just to reassure you, I don't know if you can see, it says 219 here about doing a self-assessment tax return. 219 is 2 minutes, 19 seconds. It is not 2 hours, 19 minutes. I just thought I wanted to reassure you for that. So what we've done is we've covered a lot of ground in assessing. We're going to work very quickly through the other areas, some of which is going to be some stuff which is very practical. And I want to move us on to look into the future. So instead of just thinking about where are we now, what kind of freelancer are we, how can we work out how much we spend in our personal lives, we need to look at how you can estimate what might happen for the next 12 months. I'm going to put something on the screen which is in posh terms called a cash flow planner, but I've developed one which is specifically aimed at freelancers. Rather than call it cash flow planning, think of it as how not to be skint in the middle of winter. I mean, that's kind of what this is all about. But crucially, it's about the future. It's about the future. It's not about collecting information about what's going on now. It's about using any knowledge you've got and then predicting what might happen. I'm going to show you an example just to show you the logic of it. Each column of this sheet running from left to right is a different month of the coming year. So you can run it from any month to any month. It's not something the tax office ever sees. This is just for you to help with your planning. So you can run it from June to May, or you can run it from July to June. The one I'm going to show you, I'm going to put some random figures on, and we're going to look at the income side of it, which is the top bit, and then the spending side at the bottom bit, and then I'll show you what magic it weaves. And I'm going to run it from April to March. So we're going to imagine that we're looking forward into the future, and we're kind of in a March situation, and we're looking into next April onward. So it's all about the future. Now, there are a number of lines here where you can plot what you might get coming in. You don't know what you will earn for the next 12 months. Okay, I'm very upfront about that. But what this sheet allows you to do is to have a guess as to what might happen if you earned a certain amount. If you normally earn PAYE, use these top lines. The top line is actually the most important in that scenario. So whatever money you would normally expect to receive into your bank account, just stick that in as a guess, just to use round figures based on any knowledge you might have about what you might be earning. If you're a sole trader, you would use this line, which is the turnover line. So you would put in money in the month it will arrive. Now, do remember, if you do some work in 1 month, you'll have to wait a month for the money to arrive if you invoice for it, at least. So don't put the money in the month you work, put the money in the month it's going to arrive. This is all about the flowing of cash. It's not about when you work, it's about the flowing of money coming in and going out. So that's for sole traders. And then any other would be anything. I mean, this would be money you find in a street, or you get a gift from an elderly aunt, or you put on a bank heist and you make a load of money through robbing people. I don't know. I'm not condoning that sort of behavior, but that's where that money would go. And then if you get any state benefits, I've got an extra line for you. You can use that bottom line there. Now, all of that money is a guess about what might come in certain months of the coming year. What you can then do is add the information which we looked at earlier about your personal life. This is a cut down version of that. And with all my spreadsheets, you can reword them. You can change it. You can put Morris dancing in here if you wanted to. You can change all this stuff around. And then that gives you money being spent. Because it's a spreadsheet, it weaves its magic at the bottom. And this bottom line, that bottom line is it's telling you, it's called the balance carried forward. It's telling you at the end of each month for the coming year, will you run out of money or not? Now, you will notice that some figures are black and some figures are red. If it's a black figure at the end of a month, it means that's good news. You're not going to run out of money based on the scenario you've just painted. And that money gets carried forward and up a line to be used the following month. If it's a red figure, then it means it's predicting you will run out of money. So having run a whole year, it might look like this. It's obviously too small for you to read on the screen, but someone has just put in round figures for whatever they think they might spend in different parts of their life. What they then do is ignore all those figures except the bottom line. And you just read off the bottom line to see, will you run out of cash or not in the next 12 months? Now, obviously that's just flitting past your eyes on the screen there. But what you would do, let me just scroll back. So I'm scrolling back because the worst it gets there is September next year. So this sheet is saying next September, you will be short by £465.50. So what that would make you do is have a look at your figures. You predicted you might earn less. Maybe you go on holiday in August, so you get less money in September. You see how it works if you're a sole trader? You get less money after the event. So maybe that's logical, but also this person notices that what they predicted is they might spend £500 on kit in September. But if they do that, the sheet is telling them they will be short by £465.50. Now, I think the value of doing something like this is it's making you make decisions and it's quantifying the financial effects. So it's not just saying, you're going to run out of money, because that would be a bit depressing. What it's actually saying is you're going to be short by £465. And that would immediately give you a feel for, well, what could I do differently? Maybe I should paint a different scenario. Think about doing things differently. Maybe spend money on the kit later in the year. Maybe buy secondhand kit. Maybe just don't bother. Maybe don't go on holiday in August. There's all sorts of decisions that someone could make which are thrown up by something like this. The other thing about this is that it can be very good at reducing anxiety. Let me just tell you a personal story. I ran a sheet like this because I kind of do this for a living. I ran a sheet, as I often do, for the family. So I got a sheet for my limited company, which just looks at the business side of things. There's a version of the cash flow sheet for that on my website. But I ran that type for my family in March last year. And the reason I did it was that all my training was cancelled for the whole of the rest of the year, overnight. And at the same time, my wife left a job, so she had no job. And my daughter's cafe shut, where she was earning money. And the other daughter came back from university early, so we had an extra mouth to feed. So we had more costs and we had no money coming in at all. So I thought, well, I wonder how long it'll take for the whole family to run out of money. Now, on one level, you might think, why would you want to know that? But of course, you do want to know that because it's not as bad if you know. So I ran a sheet which showed us that in March, we were going to run out of money and be hunting rabbits in the fields in August. That's what it told us. And August seemed miles away from March at that time. It seemed like a different world, August, when we were in March last year. So I thought, well, that's okay. We can last till August. And then things will change. And of course they did. So I ran it again when I got some more work. My wife got a job, ran it again. My daughter was furloughed, ran it again. University daughter got some jobs in Sainsbury's overnight, packing people's food, ran it again. So it's just a way of finding that you're on top of things and can predict the outcome of your money. And of course, what you're trying to avoid is to make sure that you don't run out. I've got a couple of questions there. Ace questions, Ruth. I'll come to the invoice one in a moment. Do you deduct your 25% from this cash flow sheet? So it's up to you as to how you operate with that cash flow sheet. What you could do is you could take the 25% out and put it somewhere else and think of it as a spend. So you're putting it to one side. That's one way of doing it. And the other way of doing it is that you could just put in, there's actually a line on the spreadsheet for tax. You can actually put in there, that's the point at which you're going to pay tax. It's whatever feels more logical. I mean, you've spotted that you would need to put some money aside if you are a sole trader from your turnover. How you do that is up to you, and you can reflect it in a way which seems most logical, because you can hack my my spreadsheet, of course. There is a password for all the resources. Now that I've shown you a couple, I see some people are interested in a reminder of the password. So it is simply the word handouts, and I'll show you where you put the password in before we have finished. Right, so we have already covered 2 areas out of 4. And I'm going to take us on to talk a little bit about savings and then a little bit about record keeping, and then I'll go through more questions. So if you've got any other questions, now's the time to stick them in the chat box, and I will try to come to all of them. So investigating ways of saving. This is very dull, isn't it? We don't like saving, we love spending. I'm just going to suggest that there are 3 types of saving that a freelancer needs to think about. All right. I'm not going to say you have to. I'm just going to say this is a good way of thinking about it. Building up 3 buffers. And here by buffer, I just mean something which will help you if you start to stop earning, or for later on where you need to spend money in something, you can save up with a buffer. So the first one is short-term savings. So this is the kind of money which will keep you in food and yoga lessons for 3 months. Okay, so it's whatever you do as a hobby. I should put a Morris dancer in there, but you know, those sorts of things keep going for 3 months. And of course, sensible freelancers did that, always have done that. And then the pandemic hit, and for some people it was a lot longer than 3 months. So that obviously caused them some difficulties, and I suspect some of you found that difficult too. But just generally speaking, and we will get back to some sort of normality, 3 months, that's the buffer for short term. So how you do that, just put it to one side and just don't spend it, but make it very accessible. Medium term savings are for repairs for boilers and things, or holidays. It looks like I'm talking about repairing your caravan there, but actually the caravan was meant to be holidays. Anyway, you get the gist. So medium term is you're going to need to spend money on some stuff. You need to save for it. Think of it as medium term and do something separate about putting money aside for that. I'm not going to tell you how to save today. I don't think that's my role here, but I do have some links on help sheet number 1 on my website, which is about personal finance, including some stuff about long-term savings. Because long-term savings is about what you want to do when you don't want to do any journalism anymore. You just want to water plants in the garden or whatever. So long-term is a 3rd type of saving. Now, I'm not going to go through this in detail at the moment. That's not what I do. But there are some links on help sheet 1 if you want to find out about pension stuff. And just thinking, if you're at the beginning of your career, can I just tell you, because I'm not at the beginning of my career, can I just tell you, get into the habit of saving for long term. If I just put up on the next screen, just a thing about pensions. So workplace pensions in the, you're going to go into detail today, but I just wanted to put up on the screen the state pension size. In the UK, the state pension is less than £10,000 a year. So that means that for most people, you're going to need to save elsewhere. Some sole traders I know, including myself, what I do is I have a self-invested personal pension, and I just put money aside when I can, when I remember, which is for longer term. But these are 3 different types of pension. You might end up with a number of each of these. Well, one state pension, maybe one of your own, and then possibly even PAYE type stuff, which results in pensions. But have a look at Help Sheet 1 if you want more information about that kind of thing, because time is pressing and I want to make sure that we just have a look at that other bugbear before we finish today. I'm happy to pick up on other questions later as we come towards the end. Now, record keeping. I don't know about you, but as I said at the beginning, I absolutely hate paperwork. I can't tell you how much I hate paperwork. I don't know whether I was frightened by a ream at a youthful age or something, because I just cannot bear it. So I've got one piece of advice which I'm going to flesh out for you, and that is this. Don't leave your record keeping to once a year. Top your records up as you go along. So first of all, work out what you need to keep, of course, and we'll talk about that in a minute. But the crucial thing is to make sure that you don't leave everything. Now, I have met countless people who do a tax return. They know that the 31st of January is the deadline. But what they tend to do is they tend to just earn through the purple year. So earning, throwing things into a shoebox. Then they think, well, I've got until January, so I won't do it yet. And then it's the summertime and it's lovely weather. And they think, I'll go sunbathing or go on holiday. I'm not going to do my tax stuff. And this shoebox just gathers dust. And then they think, it's busy in the autumn. I'm going to be working. I'm not going to do it. Then, it's Christmas. I'm not going to do tax over Christmas. And now I'm hungover because it's New Year. So I'm not going to do it over New Year. And then on the 30th of January, they absolutely panic. Now, remember that tax return deadline is a deadline. It is not a target for you to aim for. What I'm going to suggest that you would do is something I've done for 15 years, which I find has meant me, I've kept my sanity all the way through when it's come to paperwork. Do a bit of paperwork every week for 10 minutes. Work it into your life so that it's a habit that you have. Once you have a boring job and you turn it into a habit, you won't even notice you're doing it. But when you get to the end of the tax year, you do your tax return here. So you get it done immediately the tax year has finished, or as soon as possible as you can after that. My accountant and I always have a bit of a race. It's a bit like the first constituency to declare in a general election. We always try to get all my tax affairs done by the 10th of April. So the end of the tax year is the 5th of April. We try to get my personal tax done by the 10th, and also the company tax as well. So everything's out of the way. And then, of course, I see all these adverts just around after Christmas, which the tax office puts out saying, don't forget the tax return, don't forget the tax return, the deadline's coming. And I panic thinking, did I do it? Well, of course, I have done it. I did it much earlier. But it's a much better way of doing it than just leaving it all in a shoebox. There's something else that is important about this as well. And that is that the tax office is going to change its way of making you keep records. Now, just to say, what do you need to keep? Well, if you're a sole trader or even a limited company as well, then you need to keep receipts for business-related expenses. You need to keep copies of invoices, because that proves that you've charged people, and it proves that you've actually had costs, because those are the 2 really important bits of information. There is something called an income and expense account, which I've written here, which is a posh name for keeping a list of expenses and a list of income. I'm going to show you an example, which is a template on my website, which people often love. And it looks like this. Okay, so it's a bit old fashioned, but it works for me. I find I still use it even after 15 years as part of my record keeping process. What we have is turnover listed at the top. So this will be anything you charge for. And then down the side here, categories of business expense. So for a sole trader, this is a list of the typical categories of expense, which the tax office would say are kind of allowable expenses. It doesn't tell you exactly what's allowable because there isn't actually a firm list. It depends what your business is. But I've described in vague terms here on the right-hand side, I have described each category. So if you've ever wondered what do we mean by a tax deductible expense, this might help you. Now, this sheet is one of the downloads in the template section on my website. But the reason I wanted to show it to you is that it's got a lot of tabs along the bottom for each of these different categories. And I use this sheet, I still use it. I've used it for 15 years now. And I find it quite useful because it's kind of logical. And it means that at the end of each week, when I'm doing my tidy up of the week for 10 minutes, all I do is I click on the relevant tab if I've bought anything for my business. I've just clicked on Office there, Office and Admin. So that would include things like a stapler. I'll just put that as an example. If I bought a stapler for my business, nice big one, I could even write where I bought it or whatever, the stationers down the road. You don't have to do that, but there is a notes column. But the reason I'm showing you this is that if I go back to the summary sheet, can you see we now have £9.99 listed there? So every week, what I'm doing is I'm just totting up more stuff. So if I bought more stuff for my office the week after, or a couple of weeks after, or a month after, or a box of stamps, or anything like that, it just keeps adding itself up. So if you want to use this, it's already set up for you, if that's a useful way of just keeping on top of your record keeping. There's also a turnover tab. Now, Ruth in the chat box asked about what do you do about invoices? So the turnover tab is where you put your invoices. So a client. So if you do some work like finance training, as I do, excuse the spelling, this is a spelling-free zone. Let's imagine, I don't get paid this, by the way, but if I did, wow, that would be great. What I would normally do is I would put it in here on this sheet on the date on the invoice. So if it were today that I were invoicing, it would be today's date. So it would simply look like this. So that means I have a running list of income that I'm charging people. You can ignore the VAT columns. They're not relevant to you unless you're VAT registered. And we're not going to talk about that today. We don't have time. But if I go back to the summary, 10,000 income, we have total expenses that went up to nearly 160 quid. One minus the other gives you your net profit. And that's what gets plugged into your tax calculation. And you have to keep the paperwork to back this up. And fortunately, they are now very happy with you keeping the stuff digitally. So you can keep photographs of receipts and you can keep your digital invoices. You do not have to keep things in the attic anymore. Now, I found this to be a useful discipline, doing this sort of thing every week. And it's because I don't like paperwork that I do it every week, not because I do. I want to make that really clear. So what is going to come down the line, though, is something that you may be unaware of. And if any of you pays any tax in the UK, then I would suggest that you need to just listen out to this, because this is going to be something which is coming along in a couple of years' time, and it's called quarterly reporting. This is my attic as it has been over the years, with my Christmas decorations and these boxes full of receipts and things. The good news is that everything's going digital, so you don't have to do that anymore. So I have a folder on my computer which has photographs of receipts and things in it, which I have set up, and that is a great way of doing it. But the tax office has a massive project called Making Tax Digital. And if you're running as a sole trader, you need to be aware that this is going to hit you in a couple of years' time, in fact, less than 2 years' time. Under Making Tax Digital, you're going to have to report your turnover and your business-related expenses as you go through the year. So you will no longer be able to put things in a shoebox and ignore them. You will also have to use commercial software to do it. The tax office won't give you software. What it's going to do is it's going to authorize commercial software, and there will be dozens of software packages available by the time this comes in for sole traders. It'll be compulsory for any sole trader with a turnover of £10,000 or more from April 2023. That is quite soon. So what does it mean? Well, let me just say, if you're running a limited company, I know Rick is just setting one up. You'll have to do this too, but not until 2026 by the look of things. So you've got there a new system, and what's going to happen, so the system we've got now looks like this. We've had a look at this already with that tax return deadline, and you do everything anytime before the deadline. What's going to change is it's going to look like this. So if you're a sole trader, you will have to use software to capture the information about your turnover and your expenses. And then 4 times a year, You press a button and it simply reports to the tax office the turnover and the business related costs for the previous quarter. You will still have until the end of January following to finish off the whole tax return, by the way. They're only looking at the turnover and expenses as you go along. Now, this is a radical change, and they've started advertising software. If you look, I was in London recently, and behind me at Charing Cross Station, I spotted this. It's been there for about 9 months, this advert, I think. And it's advertising a bit of software. I then went down to the tube station, and there was another bit of software called Tide, which is a bank. So the two that I had already spotted were Xero, Tide, which is a digital business bank. So I'm putting it in the chat box. I've not lost my marbles. I'm just typing and speaking. And then I went up to a bus, and there was another one called Anna Money, which has the most ludicrous advertising campaign, which involves penguins. But there are going to be dozens of software providers who are going to want our business, and the reason is that there are 5 million sole traders in the UK. Now, I've actually been using a piece of software for the last 3 years called Free Agent, which I find actually quite, I mean, they're all very easy to use, to be honest. You might have heard things like QuickBooks. I've mentioned Xero. Sage is one that's used by accountants. But what's going to happen is that everybody's going to start looking around and think about, oh, which software am I going to use? I think at this stage, I would suggest that any of you who are UK-based sole traders, just keep an eye on how things develop. You might find there are good deals where you can get cheap or free software from somewhere. At the moment, most of these are going to charge you. Free Agent costs me, well, for a sole trader, it would cost about 200 quid a year to use Free Agent. But on the good side, you can take, it's an app because it's all in the cloud. There's an app on my phone for it. You take photographs. They all work this way. Take a photograph, attach it. You can link up your bank account. You can do your invoices in the app as well. And then when you get paid, it says, oh, look, you've been paid. Is it for this invoice? And you click yes, and that's it. It's all done. So no, I actually don't have a problem with the digitization. I think that's all fine. I think the issue comes with the cost, because we're effectively being told we have to pay to be able to pay our taxes, which seems a little bit wrong, but hey. Now, if you're interested in looking at more about record keeping, help sheet number 4 is about record keeping, including making tax digital. And I think it doesn't matter where you are in the world. I think the thing I would suggest is that you try to get on top of keeping some records as you go along, which you then might want to pass to somebody else. I mean, I have an accountant helping me, but all I do is email my spreadsheet to my accountant and ask questions on it. Like, can I get away with this? I write it on the spreadsheet because I send it to him and he looks through and he says, oh, you can get away with that. And then he creates a tax return for me, which I then sign. So that's all pretty, straightforward. But because I've done all that donkey work for 10 minutes every Friday, the accountant has less to do, charges me less. So don't just dismiss it, but also don't get too bogged down in it. So just do enough, but not too much, because we hate paperwork. Now, I think we got to the stage where I should take a sip of water while reading out some of the questions, or rather reading some of the questions. So I'm just going to have a quick look through. You had a question about invoices, Ruth. So if you're a sole trader, what happens is there is a normal way of doing it, and then there is an optional way of doing it. So the normal way of doing it for businesses in the UK is that it's the date on the invoice that dictates which financial year that transaction took place. So if you did some work in March, but the money hasn't come in until May, it's still March that you would account for it. So it's last tax year. That's the normal way. And actually, there are some advantages in doing it on the date on the invoice. The other way of doing it, which is available to sole traders, is called cash accounting. So it's that term, cash accounting. And so you can choose to do it that way, but you have to choose one or the other. You can't mix and match. Some accountants I've spoken to don't really like cash accounting so much. It gets more confused. But I've never done cash accounting. And as a limited company business, we don't have a choice anyway. We have to do the accrual method, which is the normal way. So I hope that's helped you. So the answer to your question is both, but you have to choose if you're a sole trader. Just having a flick through. Apologies if I've missed any of your questions. So in-kind production costs has a value, does not require cash outflow. I don't know the answer to that, Alice, and there may be different rules in different places about that. If anybody else has an answer, by all means, let us know. I'm always keen to share knowledge, not just have me pontificating. I'm not quite sure what you might refer to there, but they're generally speaking, if you're working for a production, it depends how you're being paid, doesn't it? If you're being paid as an employee, then they should be covering all your costs anyway. I'll just leave it at that. That sounded terribly vague, didn't it? How do bank statements instead of receipts? Yeah, you've got to be careful with bank statements on their own, Rick. Get into the habit of asking for receipts wherever you can. And if you buy something online, print off the receipt or do a screenshot. I think bank statements for small things is okay. But I think if you bought any equipment and it was only on the bank statement, I think that would look a bit shifty. And the tax office, you don't want to look shifty in front of the tax office if they ever ask you anything. And with this new system, they're going to be able to look at your receipts because, of course, you'll be uploading everything to them as you go through the year. So I don't suppose they will be looking at all our stuff all the time. But it will be easier for them to check the paperwork, won't it? So, yeah, there must be some written record, surely. I mean, you say you don't get given stuff. I usually find I can get a written record, which I can sort of makes it look like it's definitely happened, regardless of what I buy. When I used to work for the World Service, it used to use my business cards and get the taxi drivers to sign the back. Even if they couldn't write, they knew what I was doing. So that was all right. Sarah Escobar, I opened with another freelancer, a company, okay, for being able to pay for different work. Sorry, I'm reading this. It's in the chat box. It's a long question, Sarah. Apply for different works with more consolidated figures. So the 3-month savings should apply to each of us separately and also for the company. I don't understand your question. I'm sure it's a very good one. I'm very happy if you want to unmute yourself. If you want to try and describe the question to me, Sarah, I'm very happy to try and deal with it.
Yeah, hello.
Hi, nice to talk to you. Nice to hear another voice.
Yeah, the question is, what savings do you suggest we should have for our freelancers company? Should we follow those like 3-month savings and medium savings? Because it's kind of a team figure company. We are freelancers, okay, but we use it for applying for different works.
Understood. I mean, the long-term savings I was talking about more about pensions for individuals. So that wouldn't really apply. It sounds to me like you're talking about a business where a number of you are sharing the business. Is this in the UK, Sarah?
No, Mexico.
In Mexico, okay. So I think I'm going to talk generally. I think if you are running a company where there's more than one of you running the business, you need to decide how much of a buffer you put in place, how many savings you have for short-term emergencies where the cash just doesn't come in and you have a cash flow problem, because that's always the thing that businesses have a problem with, is cash flow. That's why I went through it in the way I did, because it's important to think in that way. So you, as a business, you always need to predict your cash flow, but you also need to have an amount of cash, and 3 months is not a bad amount. If it can be longer than that, that would be great. So that will cover all the costs for 3 months if everything went a bit wrong and you've got no income. You might also want to put savings aside for buying kit or repairing a studio or anything like that. And that would be up to you. I think savings like that, as long as they're identified for a purpose, are a really good idea. So go for it, is my answer. Muy bien. Muchas gracias.
Gracias.
Okay. Now, I think, have I covered, Leanne, I think I've covered all the questions. In case there's some more questions coming in, let me just show you where to get everything. I did promise that. So I'm actually going to go live to the internet. I think I'll show it to you on my website. And then I'll just put up another slide for this. So this is my website. If you go to course materials and click on it, what happens is it opens up a page which has all my clients listed. And I've added Rory Peck Trust. So there it is, Rory Peck Trust. There we go. So if you click on that, it opens up and you can see the logo. And there we are, controlling freelance finances, or show me the money, as we're now calling it, which I thought was great. And then when you click on that, it will ask you for a password. The password is handouts. So I'll just put that for a third time here in the box, handouts. And it's lowercase. And as you can see, it's giving you a load of stuff, some of which is UK based. I understand that. But for help sheets, some of that advice on the help sheets is going to be relevant wherever you live. So you can have a look at that. There's all sorts of stuff here, including what to ask an accountant. I'll just close that. And then the templates, which I think is probably what you'll find most useful. There are a lot of templates, okay? But the ones I showed you is the new monthly budgeting sheet for freelancers. That's the one for your personal expenditure. So you can just type in, and remember, all my spreadsheets are open. You can change them, you can hack them, you can put them in Spanish, you can do what you like with them. But it's just giving you a tool to try and capture how hard you need to work. And then there are 2 cash flow planners. There's the cash flow planner for companies and sole traders. So this would be looking at it from the point of view of the business. And then the second one here, I hope this is big enough for you to see, otherwise I'm wasting my time, aren't I? The cash flow planner there is the one I showed you, is the one which includes household and PAYE income. Finally, the income and expense account, which is here. So the income and expense account is that rather basic spreadsheet which I showed you. Sorry about that. I was just trying to click on something and it clicked the wrong thing. The cash flow planning is not for necessarily for the UK, Katharina. The cash flow planning is a conceptual tool. It's not for the tax office in the UK. It's much more about how much money might I have coming in and how much money will I have going out. So the reason I went through it in such detail was it doesn't matter where you live. That kind of planning thought is a really important one, because what you're trying to do is to avoid running out of money. Doesn't matter whether it's sterling in the UK or where you are, and whatever cash you get in and whatever you spend. So go for it is what I say. So yeah, and if you have any questions or you find something that doesn't work or you can't find what you're looking for, please get back in touch with me. I really don't mind that. I quite like keeping in touch, and I'm just going to put my email address in the chat box for you. You can get in touch with me in all the usual ways via my social media and also on my website. Let me just put the final slide up, actually. So it's got a couple of other things which are useful to know about where you can get hold of me. So let me just put that up on the screen for you. And then you have everything you need. There we go. Oh, no, I don't have that one. Forget that. I'll just put up the final slide, which has got it's got a QR code on it, and it took me ages to find the QR code. So I'm going to give that to you anyway. There you go. So you can scan and it will take you to the course materials page. Good heavens, such technology. But there you have everything you need. So I look forward to hearing from you if you need me. Otherwise, please look on the website. It's there for you. And I hope you find what you need, and then you won't have to email me. But if you do get stuck, you know where I am.
Wonderful. Thank you so much, David. It's been a super informative session with lots of information. So thank you so much. And thanks to everyone who's attended tonight.
Thanks for the questions, folks. It's really great.
Bye, everyone. Thank you.